Okay, hi everyone. This is Katie here. So today I'm just going to share how I screen for fundamentally good stocks using the screener in finviz.com. So let's take a look at the screener here. So there are certain criteria that I look for when I screen for stocks to sell options for. So one of the criteria is that the stock must be fundamentally sound because when I want to sell options, the intention is to actually want to hold the stock forever. So that is why I always believe in that the stock must be fundamentally sound. So those growth stocks or those stocks that are speculative in nature, I would tend not to sell options for that. So let's take a look at the screener here. So under the descriptive tab here, there's a couple of views. So I will just select USA because it's the US stock market. Then let me see, exchange. I will also look at the analyst recommendation, buy or better. So actually, analyst recommendation is quite important because we always want to be with the majority of the experts in the industry. So we look at whether is it optionable because I'm in the option selling game here. Now, next, let's look at fundamental before we go back to descriptive again. So just to narrow down our search criteria. So for fundamental wise, I will look at return on equity must be positive. Return on assets must be positive. My gross margin positive, and also operating margin positive, and also net profit margin positive. So what are these? If you just hover around, what is return on assets? It's just a indicator of how profitable a company is relative to its total assets. So uh, a positive ROA is definitely more preferred. About return on equity, a measure of a corporation's profitability that reveals how much profit a company generates with the money shareholders have invested. So the same principle, when it's positive, it's more preferred. And also gross margin, company total sales revenue minus its cost of goods sold divided by the total sales revenue expressed as a percentage. So the gross margin represents the percent of total sales revenue that the company retains after incurring the direct costs associated with producing the goods and services sold by a company. So the higher the percentage, the more the company retains on each dollar of sales to service its other costs and obligations. So obviously, positive is more preferred. Same for return on investment. It's a performance measure used to evaluate the efficiency of an investment or to compare the efficiency of a number of different investments. So definitely the more positive the ROI is, the more preferred it is. So operating margin is a measure of what proportion of a company's revenue is left over after paying for variable costs of production such as wages, raw materials, etc. So a healthy operating margin is required for a company to be able to pay for its fixed costs, such as interest on debt. So also a positive figure, it's more preferred. And net profit margin, a ratio of probability calculated as net income divided by revenue or net profits divided by sales. You measure how much out of each every dollar of sales a company actually keeps in earnings. And of course, the more positive, the better. So if you look at this screening, right, it's you managed to screen 1,146 stocks that you would actually want to look at, but there are still a lot of companies. So what are the other indicators that I will look? I think PE ratio, price to earnings ratio, valuation ratio of a company's current share price compared to its per share earnings. For me, I would rather see the comparison between the PE and the forward PE. So forward PE is a measure of the price to earnings ratio using forecasted earnings for the PE calculation. So what I would see is actually is there a decrease in the forward PE? Because if it's a decrease in the forward PE, it means that the earnings forecasted has increased. So first criteria for PE is that PE to forward PE must decrease, which indicates higher earnings. And also there's a estimation like for the industry, what is a normal PE like? Um, I think usually PE, if you're more than zero, it means that it's profitable. Whether is it above 50 or above 20, it really depends on the industry. Yeah, but usually there is a guideline like the PE should be at least 10 to 30 in between to be so-called average PE. But usually I don't really go to that detail. So as long as it's profitable, uh, it's okay, right? So just decrease. Next, I'll look at back to the descriptive tab here. So from here, I will look at uh, the market capitalization. So for it is the total dollar market value of all of a company's outstanding shares. So I will look at mega cap or large cap because they are fundamentally more sound uh, and it would be a more preferred choice. And you can see that in mega caps or large caps, there will be well-known names that you can spot. So this could also help to identify a company that has liquidity for you to buy and sell options. So this will indirectly cause a narrower bid and ask spread. So it's easier to prevent losing some profits on the slippage due to slippage. Okay, so I'll look at mega cap first. So mega cap and then price. I would usually I would look at 20 to 50 or 50 to 100. Okay, so okay, 20 to 50 for mega cap, there's nothing here. So 50 to 100, we have three. So probably next week I will take a look at Cisco, Coca-Cola, and Merck. But first I need to open the tabs and take a look. So let me open in a separate tab. So if I look at Merck here, right, it's a downward trend. So I will refrain from going into this stock. And I'm also looking at the different analysts' recommendations, like it's a buy to hold rating change. So probably it will be not within my criteria. Coca-Cola, the graphs looks good. So it's like on a bullish momentum here. And here I look at the different analysts ratings, like the rating change from hold to buy, target price is 75. Yep, so Coca-Cola is one of the stocks that I would also look at based on the criteria. Cisco Systems, it looks like a uptrend. So this is also worth looking at. Okay, and the target price is from 66 to $80 from neutral to buy. So there's still upside on this. So from the criteria for mega caps, I'll be looking at Coca-Cola and also Cisco. Now, if I change it to large, so that's more companies that are being selected. So that's like 99 companies here. So it's the companies that are quite famous. Like example, you have Colgate, Palmolive, and then you have also ConocoPhillips. So these are all big names. Just to further reduce the criteria. Okay, so I would just see if there's any chance for dividend. So dividend, I will just play around. Uh, what's the principle behind this? Is that, example, if I do sell puts on these stocks, right, and the market price goes down, and I got a sign. At least when I hold this stock while selling covered calls as part of the wheel strategy, I will be able to get some dividend at the same time. So I will look at over 1%, that's 54, 2%, 38, 3%, 25, 4%. You have already filter, and let's see what's 5%. Hmm. So anything above 4% or 5% is already quite good already. So let's take a look at these companies. Okay. So let me close. So okay, it's on a bear trend, so I wouldn't want to take a look at this stock here. Okay. This looks like a bull trend, so can take a look at going into this stock MPLX here. So price is 43.53. Oh, but when I look at the price target, 43, probably not. There are better opportunities or better selections out there. Okay, so back over 6%. Okay, so let's go to positive here. So we are talking about large cap. What about large cap that is $20 to $50? So 46. And then dividend high. You have Dow. There's a couple that's Pfizer, uh, Verizon. So there are others, Omega, I guess. So just taking a look at a few. So Dow is on a downward trend, so I probably wouldn't touch this stock. Pfizer, okay, up and down. And then if I look at the weekly and monthly, so there are ups and downs. So I think it looks like a consolidating period. So, and the dividend yield is quite high, and it's in the drug and manufacturers, probably the healthcare. So, healthcare in terms of ups and downs, right? It's more of a defensive stock. So probably this could be a opportunity to go into. And I took take a look. The price is about target change is about 29. So still worth to take a look at Pfizer. Verizon up and down weekly. Okay, the graph looks healthy, like a consolidating period. Price target about $40, so it's now 40 about there. So uh, not that much of an upside here. So so I think there are better choices out there. So that's the thought process. About Omega Healthcare Investors. So let's take a look. Graph is okay. $45, 36. So there's some potential upside here. So we can take a look at this stock. So I think that's all. Of course, I can play around with other indicators to see what fulfills my criteria. But I think with this is good enough to have a preliminary filter on the stocks that you can consider to sell options for. So, but I think for mega cap, you won't go wrong because mega cap companies they are quite stable. Just that the premium might not be that great in normal times because options thrives on volatility. So maybe during a certain event or during earnings, then the premium will be higher if you want to sell options too. And also look at some of the companies that PE is quite high. Yeah. So, technical wise, I don't usually look at technical. Technical is just a reference, is to see whether is it a good time to enter now. Yeah. So, For me, I would just monitor and see. Uh, let's take a look. So, example, Verizon, right? Okay, the technical looks good because the stochastic here it's oversold and there's a cross, so it might uh, go up. Okay, and also for the Bollinger Band, it's already so-called touching the tip of this. So it looks like it might be a good chance to go in. Okay, so back here, so I won't look at the technical tabs. News-wise, nothing much. ETF, nothing much. Yeah. So let's see, is there anything that might affect? Probably insider transaction. So uh, positive would be good to take a look. So let's see, there's some insider buying here. Oh, oh no, I think positive just means that there is some news for insider. Yeah. So director buying option exercise zero proposal. Okay, let's see what's very positive. Nothing much. Mm, any? Buy, selling. Okay. So probably just a reference for insider trading. So it wouldn't really affect much of the screening. So just this. Yeah. So I think that's all. Yeah. So remember to like this video and subscribe to the YouTube channel and turn on your notification bell. I think that's all for sharing how I screen my stocks and to look at which stocks to go into selling options for. Yeah, so have a great day, everyone. Yeah, signing off.